Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is October 16th, Wednesday. We're going to take a look at Wingstop. This is out of the consumer discretionary sector, and you're probably or maybe familiar with this company. I know I am. We've got one around the corner from my house. If you want to buy some wings, for a ball game, or you're watching a football game or basketball game, or just want to get some wings for dinner, that's really their bread and butter. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that notification bell so you're notified whenever we put out any new content. I do the stock pick of the day video series Monday through Thursday whenever the market's open. I also take suggestions from viewers or subscribers. So if you have a suggestion like Wingstop, you'd like me to take a look at a company stock, drop it in the comment section down below. I'll work it in the rotation. Special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. And one last request, if you could watch the videos to the end, watch time is one of the major metrics that YouTube uses in their algorithms to be able to push these videos out. So make sure you're watching to the end. Drop a comment down below. Click that thumbs up button, subscribe, and click that notification bell. Thank you to everyone who's taken the time to do that. It's free, doesn't cost you anything but a second of your time. Really does help out the channel. Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I'm interested in adding it to my watch list. And just because it meets 5 of 8 or 6 of 9, if it's a financial company I throw in price to book, does not mean I'm investing it. Again, it means it goes onto my watch list. Then I do more of a deep dive into the financials of the company, looking at their balance sheet, their income statements, do a discounted cash flow analysis, figure out a range of price that I'm willing to pay for it, and then wait for it to fall in that range. And then, and only then, after I've done all of that research, do I pull the trigger. And if you don't want to do that kind of research, that's fine. Index funds, ETFs, something that tracks the S&P 500 is what Warren Buffett would recommend. So something like VOO, Vanguard's S&P 500 ETF, something like SPY, something that tracks the S&P 500 would be what Warren Buffett would recommend to you. So then you can just set it and forget it. You don't have to do any research. Just buy as often as you can afford to. Now let's get back to Wingstop. Check them out at their homepage, www.wingstop.com. That's www.wingstop.com. That is their homepage where I pull this information from. About us, Wingstop, and we don't stop. What began as a small Buffalo-style chicken wing restaurant in Garland, Texas, yep, down in Texas, that's where they started, continues to soar to great heights. Today, there are more than 2,000 restaurants open across the globe. Wingstop quickly became a fan favorite when we first opened our doors in 1994. Our proprietary recipes, outstanding food, and superior customer service created a demand that could only be satisfied by more locations. And in 1997, we began offering franchises. Today, we are one of the fastest growing concepts in the country, attracting top entrepreneurs and operators with the drive and passion to own their own business. You can read the rest of this, but again, it's wings, fries, almost like bar food type of food and environment. And when you're going there, you're going there to watch a ball game. You're going there to maybe celebrate an event, something like that. I know whenever we go there, it's typically we're having people over and we get to take out, bring the wings home. So that's really their bread and butter is their wings, obviously the name Wingstop, right? Now, the reason we are taking a look at them, down 3.86% on the day, we are talking about Wingstop Inc., ticker WING. Again, this is out of the consumer discretionary sector. Closed out the day at $377.89 with a low of $173.74 over the last 52 weeks, a high of $433.86. So they are closer to their 52-week high, and kudos to all of you out there who are buying them back in the 173 or 170 range. That's a heck of a return over the last year. Again, kudos to you if you have owned them over the last year or before. Now, they do have a market cap of 11.076 billion, so they are a small cap company, and they say they're growing pretty well. Beta of 1.69, so they are more volatile than the overall market. You can see that volatility, right? That's quite a bit of volatility. Big drop on the day, but looks like they tried to recover. Big drop, big recovery, big drop, little recovery, then rest of the volatility throughout the day. PE is very high, $118.83 per share. That is extremely high, and I know they're saying they're growing fast, but boy, they need to be growing extremely fast to justify such a high PE. That is even higher than a lot of fast-growing tech companies that I've seen out there. EPS, earnings per share, $3.18 per share. Earnings date coming up sometime October 30th there. Forward dividend is $1.08. They are a quarterly payer. divide by 4, or we'll see it here in a little bit, their dividend per share per quarter at the end of the video. Their dividend yield is low, very low starting dividend yield on this one, 0.27%. Ex-dividend date August 16th. They paid out on September 6th. So if you bought them now, you would be in line for the next dividend, but you're going to have to wait a few months to get it. And 1-year target, at least according to Yahoo Finance, $426.27, which speaks to some upside as far as price appreciation in the stock price from where it currently sits. Again, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just one of the sources I go to look up information. Now, we're going to jump over and look at dividend yield theory to see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average of 0.4%, compare it to their current 0.27%. 0.27% here, or over here where it says forward 0.27%, same number. Since it is lower than their 5-year average, that actually speaks to overvaluation. So according to dividend yield theory, this one is potentially overvalued. Now, payout ratio, I like under 75%. They're sitting at 27.50, so plenty of room. Their dividend is safe. It is not in jeopardy of being cut. Very low number here. Dropping down to free cash flow, I like growing free cash flow over time, because typically if a company has growing free cash flow, they will raise that dividend along with that growing free cash flow. It also makes sure they're secure in being able to raise that dividend, pay down debt, make acquisitions, reinvest back into the company, and raise dividends over time. 2021 year, you can see $20.8 million in free cash flow, jump up in 2022 to $52 million, 2023 up to $80 million. And the trailing 12 months, which most of that is 2024 now, though we're only in October, so we still have a couple months, but looks like they're going to have a better year in 2024, $109 million, and they have been repurchasing shares. Last year was $125 million, this year $154 million. So nice, steady free cash flow growth. You know, even doubled in 2022. Didn't quite double in 2023. Definitely didn't double in 2024. Now, if it was doubling every year, maybe, you know, the price to earnings is justified, but boy, that's an insane price to earnings ratio. I can't believe how high that is, to be honest with you, especially for a company in the consumer discretionary sector. Just extremely high. Now, jumping over to stockanalysis.com, this is another source I go to for information. You pick any sources that you like, but I do recommend more than one so you can make sure the information you are getting is accurate and up to date. Now, they have 19 analysts that have taken a look at this. They do call it a consensus buy, though it is right on the edge of a hold and a buy, this being a strong sell, hold, buy, strong buy. And if you were to go to the webpage, stockanalysis.com, you'd be able to click on each one of these little tabs and see how many of the 19 analysts might call it a strong sell, a hold, a buy, or a strong buy. I did not do that before this, but you could do that if you wanted. They do have a low estimate of $191, which would represent a 49.54% decrease from where they currently sit. Average estimate of $377.47, which is a little bit lower than what we saw with Yahoo Finance on the previous page. That would represent a 0.28% decrease from where they currently sit. And if it happened to hit their high of $475, that would be a 25.49% increase. All the while you collect that small dividend yield or dividend payout. Now, I like to get into statistics. I look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. And I like 10% or better for these metrics. Return on equity not listed. I don't like to see that. That leads me to believe it's in the negative, which a lot of time companies like this are. They're starting new businesses or new locations, so that means they've got a lot of front-end costs building out that location. Now, with this being a franchise, I don't know how that works. Whether the overall parent company, Wingstop, or the franchisee is responsible for buying the location, finding the location, or whether Wingstop does that for them. I'm not sure. You'd have to do more research on that. Return on invested capital is above 10% at 26.22%. Very good number overall. I just wish they had the return on equity. And EPS growth, I like forecasted 5% better growth or more over the next 5 years. They're sitting at 25.07, so very good there. So maybe that's still, even with 25% forecasted growth, earnings per share, that 118 price to earnings is just really, really high. Revenue growth forecasted at 18.68, very good revenue growth forecasted as well. Now, as we mentioned, they are a quarterly payer. Payout ratio, they're saying 33.76% from stockanalysis.com. Yahoo Finance had them at 27. Either way, in the 30s or in the 20s is a very low payout ratio, and that's why I like more than one source. Sometimes this information is a little off from one source to the other, right? Dividend growth, double digits here, 17.72%, very high dividend growth. 3 years of dividend growth, so not a long history. Buyback yield of 1.48%, shareholder yield of 1.76%. Now, going back in time, now they do pay on the March, June, September, December timeframe. Most companies do. And going back in time here, you can see they were paying, this must be a special dividend, $4 per share. That's definitely got to be a special dividend. That is not their typical dividend payout. So let's go to May 2022 here, 17 cents. August 2022, they raised it up to 19 cents. August 2023 up to 22 cents. And most recently, August 2024 up to 27 cents. So there's that 17% dividend growth. Now, I would expect if they're going to continue this growth, it won't be until August of 2025 when they raise that payout again. And it doesn't look like they do these special dividends very often, but it is nice to see they do them on occasion. And the last one being in 2022. All right, let's jump back into the screener, see how this one stacks up and wrap this video up. Understand the business, that's where we started. Check right there, a wing restaurant, provide other things like, you know, sodas and pizzas and fries, and like I said, kind of like a bar food. Growing free cash flow, yep, they did have growing free cash flow. Growing dividend, yes, high double digits, almost 20%. Dividend payout ratio is under 75%. Check there. Dividend yield theory does not say it's potentially undervalued. It actually says the opposite. It says it is potentially overvalued right now. It is not within 15% of a 52-week low. Return on invested capital looked good. Return on equity was not listed, so we can't give them a check for that one. Earnings per share growth was listed at 25%, so check there. So 1, 2, 3, 4, 5. This one would make it onto my watch list. I'll be honest with you, it's not going on my watch list. With such a high PE, this one needs to come down significantly. And I'm a little leery of restaurants just because of the nature of, if we were to go into recession, that's the first thing people cut out. But if you're interested in companies in the restaurant space, that's when I would look at them. Whenever we are entering into a recession and things start to slow down, or as we're coming out of a recession, that's the time I would really look at companies like this. It's really not one that I want to add to my watch list. Again, I'm just very leery of this particular type of company. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up button, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Wingstop. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation and circumstances and select the criteria or seek the advice that comes from a certified financial advisor.